You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' bit of tunage means it is time once again for the Option Block. I hope it's your favorite out there. It's certainly mine, bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we hope so, the Options Insider Radio Network. Fun stuff in store for you. Of course, you can get it live in your ear holes every Monday and Thursday, noon Central, 1 p.m. Eastern, as well as, of course, after the fact on all your devices of choice. And if you like what you listen to, leave a review in there. It always helps new folks discover the show. And there's always new folks flocking in all the time. We love to see them. We love to see them in the chat. We love to hear from them in the questions. So if you want to help new folks continue to discover the program, head on out there and leave some reviews out there. Except for the Rock Lobster. We know what you all think of him. All right. And speaking of which, joining me on the old program today, let's start, since I threw him under the bus to start with. It would only be fair to start with him. He is the rockingest of lobsters, or perhaps the coldest water of lobsters. I don't know. Let's find out. Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. He's happy to be back on the program because he's been living by candlelight for the last, a few days or so. Mr. Rock Lobster, how's it feel to be back in the 21st century?
It's nice. I guess just trees keep falling down. All these, we have wind every October. It gets a little breezy in Maine, but we're surviving. And right now, I am definitely a cold water lobster because it is cold here.
Yeah, at least you guys didn't have the crazy white Christmas that was Halloween here in Chicago. You guys dodged that bullet. You had your nor'easter, so you have your own issues, clearly, but not so much on the white Christmas, which was Halloween, which I hope not to repeat anytime soon. All right, and also joining us from the active trader hot seat over there in Fidelity Land once again. It's another last. This time it is the last emperor. Mr. Konstantin VRANDOPULO holding down the active trader hot seat today. Mr. Last Emperor, welcome back to the program to you as well.
Thank you so much. I can tell you that the weather was in the low 50s for a couple of days, including the night of Halloween, and people here in Florida were breaking out their puffer jackets. So, I guess it just depends on where you are, what you consider being cold or windy.
Yeah, you go to Florida or Southern California and it breaks 60 to the downside. That's when the parkas come out, and the scarves and the gloves, and the hats. It always cracks me up to see that. Puts a smile on my face. You know who always got a smile on his face these days? Of course, I'm talking about Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. What is putting a smile on your face today, sir?
All the facts that never before in stock market history. Has there ever been a better time to sell than right now? Very exciting day. We're at new all-time highs right now. Doesn't necessarily mean you should sell, but exciting day nonetheless. I don't see how it can get much better.
Of course, you're referring to the Dow, right?
I just look at the S&P. What's the Dow?
Uncle Mike loves himself some Dow as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. I was just joking about the Dow, but the Dow was making some headlines today, not the least of which because McDonald's, our other friends, we have so many corporate HQs right across the street or down the street from us here. We got Boeing right across the street, and we got McDonald's HQ down the street here. They just moved that to downtown Chicago as well, and they're having some problems in the C-suite over there. Their CEO unexpectedly stepping down. That, of course, weighing on the stock and indeed weighing on the Dow. But so it's kind of limiting the Dow. But the Dow still threatening a record high. In fact, pretty much everything is out there. It's another day of green on the street as the global concerns over the trade war seem to be easing a little bit. Some more conciliatory comments coming on that side of the fence here over the weekend, and that all conspiring to pretty much lift everything. Everything's up right now. So the Dow, the S&P, the NASDAQ, all up. NASDAQ leading the charge, up a little over 0.5%. S&P, as it is wont to do, the laggard up a little over 0.4%, and the Dow up about a little more than 0.33%. Gold actually up slightly as well, and so is crude. Crude getting a lift. WTI up to 57. It was down 54 on TWIFO last week. So a three-handle move over the course of the last, not quite a week, few days here. So big moves out here in WTI as well. Should be interesting when we get to TWIFO later on in the week. And, of course, all this green means our old friend VIX Cash actually moving perhaps a little bit different way than you'd expect. Now, you'd think VIX Cash would be easing on a day like today, and yet it is actually up a little over half a handle, threatening that 13 handle. Got north of it again today. Got up about 13 a little while ago. Now it's at around 12.85 or so. That puts it up, let's see, actually puts it down from our last show, down about half a handle from where it was on the show last week. And, of course, our old friend VVIX, a.k.a. the volatility of volatility, VIX is up, VIX is down. That means VVIX staying a little frothy. It's up actually about a handle and a half from where it was this time last show, up to about an 88. And our old friend VXX is still south of that 20 handle, well south of it now, about around a 19 or so, which puts it down about a point from last show. All right, let's go around the horn. See what everyone has on their radar. Let's start the way we came. Let's start with Uncle Mike. So, Uncle Mike, what is on your radar? Or I should say, what are you watching? What is lighting up your tape today, sir?
Well, of course, you have the S&P making new all-time highs. I mean, that you have that, then what else is there, right? No. Financials are looking pretty good today. Not quite up 1%, but definitely close to it. Just referring to XLF, of course. Bonds are taking it on the chin, the prices. We have metals that are relatively flat right now. Sorry about that. Apple's relatively flat right now for Apple. It's only up 50 cents, but in the rest of the FANGs, we have Amazon up over 1%, Facebook up close to 1%, Google making a run at it as well today, too. So definitely a lot of movement on technology at this stage. We have XLE, the energy stocks, up over quite a bit. So, I mean, the thing that I'm actually watching and scratching my head right now, and I'm curious to hear the Rock Lobster's take on this, is what's going on with VIX. The rest of everything that we have, it's pretty close to not quite everything is awesome, but most things are awesome market. But for the most part, everything that I'm looking at is, besides silver being flat, it's an everything is awesome type of day today. So with that, with the short calls that I have at certain levels, Rock Lobster, I'd appreciate if you could make the VIX go down to get back with the inverse movement of it. So if you can take care of that, I'll be happy.
All right, Mr. Rock Lobster, you have been invoked, sir. So therefore, he is calling into question your powers to move the VIX. So why don't you set him straight, sir?
Why would he do that? I don't think that's very nice. He's asking if I could do it.
I am asking. Asking as a professional courtesy.
So I think today is what I would call a normal weekend effect markup for VIX. The liquidity provider will roll down VIX roll down, or let's say roll the days forward on their theoretical modeling when the weekend comes. It's what I used to do. That's what probably LONGO used to do, run your sheets a few days ahead. I teach that as a technique to help people buy cheap vol at Option Pit. But for here, so by Monday what happens is on Friday, the liquidity provider starts to press vol down or roll the date forward into the weekend because they basically don't want to buy 2 days worth of juice that they're not really going to get to use. And it's a bit of an art and science how much they roll it down. But implied volatility posts on it is marked on the trade day. So, Friday's implied vol is Friday's implied vol. But if they roll sheets forward by Monday, vol comes back up because we're kind of catching up to the trade day, so to speak. And it might sound a little confusing, but that's kind of how it works. One thing you can see is while VIX cash is up a little bit, the vol futures are down a little bit. They're decaying toward VIX. So, in order to make Mike happy, I would say, look at that VIX future movement. All the futures are down, all on the term structure fractionally. So that is usually less volatility coming forward. I mean, if the futures go down. The second part would be because we've had such a straight launch, it's hard for volatility at the money kind of to drop too much. We're kind of been, up 0.5%, up 0.5%, up 1%. So volatility tends to be dragged a little higher than it normally would because the rally, I think, is pretty solid. So a lot of that stuff, volatility works both ways. Like vol can go up actually when the market goes up if it moves up really fast. So we're kind of in that spot right now where like the short vol trade and the short SPY trade, which I do have on using the vol products, it's making a little bit of money, but we moved up so fast that the hedge is getting kind of slaughtered fast. And VXX and VIX is not going down fast enough. So it's at that point where, yes, I would like to see the market kind of sit here for a little bit because that's actually when implied volatility can drop once we stop moving. So while in general, when the market goes up, that's usually bearish for vol. If it goes up too fast, volatility tends to hang where it is. It's really hard for it to go down. And that's where I would say we are right now. We're kind of at that spot where the market's ripped up, and it's hard for implied volatility S&P 500 to get too much lower now that we're, I believe, let me look, I think we're at a single digit now for a VIX cycle. I can tell you in 2 seconds. I know we were close for the No 15 cycle. I wrote a blog about it. It'll be out later today. But we are just about, because by the end of the month, vol is right around 1050. We still have like an 11.5, 10.5 volatility. So normally I would say at all-time highs, VIX should probably be 11 and change. And at the money, vol should be around 9 for 1 month out, and we're not there yet. So there's still that little bit of trade worry, which is reasonable because we've seen this movie before. However, as TOSAW said, we have not seen, never in the history of the SPX has there been a better time to sell than today. So I would say slightly higher vol, which is it's still a little cause for concern on that part. A little bit.
Just a little bit. But a man who's never concerned, even though he's holding down a very uncomfortable seat, is the Last Emperor. Mr. Last Emperor, sir, a lot popping off in an otherwise kind of weird day here on the street. Everything's moving up, including volatility. It's an up day across the board here, which is kind of weird. What's lighting up the scene over there in Fidelity Land today, sir?
Yeah, guys, so quite a few things moving, a couple of names that generally don't show up on the board, which I'll mention. But I was just, kind of looking at the market very closely over the past few days, especially since we broke the previous all-time high and started to go higher with a lot of momentum. The interesting part is that all of the action generally takes place overnight, right? It's kind of like you look at the marketplace and you ask yourself, why did they even open? Because all the action takes place in the first half hour and the last half hour, practically, and the futures do the overnight moves, right? So it's been kind of a dull thing to watch throughout the day. We are having another one of those days right now. We're kind of grinding, in 2 to 3 point range for hours at a time. And then, towards the end of the day, that's where the actual momentum picks up and it tends to carry. So we'll see how we finish the day today. I wouldn't be surprised if we will, maybe test some of those highs that we saw earlier in the morning. But we'll see. What's moving here at Fidelity, what people are trading. You mentioned already, McDonald's is actually the number one name. It overtaken Apple's seat as kind of the king of this ranking system today, down obviously 3%. I know that Easterbrook got fired, or I guess is departing today, so I guess the stock is taken on the chin a little bit. Now, Fidelity customers are definitely leaning heavily to the bullish side. I don't normally see this sort of bias, but today it's 81% buys versus 19% sells. You're seeing huge volume in the stock, and definitely 5.5, 6 times the ADV in the options markets. So there's plenty of trading going on in this name today. I was just going to mention, it's not my place to comment on the behavior of any particular CEO, whatever happened, right? I'm sure the board most likely made the right decision. What I can tell you, though, is that I remember very well when he actually took the seat of becoming the CEO, and that was 2015. It was right at the beginning, probably February or March of 2015, and the stock has struggled for a long time prior to that. And since then, stock is up 100%, which, I would say that over 3.5 year period is a pretty good performer, double the amount of the S&P as a whole. And obviously it's been a lot higher most recently, topped out around 225 or so, now trading 188. So quick, sharp pullback, down 15% off the highs. And what's interesting for me, on this chart is that these levels of 188 we haven't seen. Used to be, resistance in November of 2018, got tested again in January of 2019, and then again in March, and we finally broke out. So now we're sort of retesting those levels, and you could see that, in momentum terms, you're definitely in pretty extreme oversold conditions, and you're having a lot of volume pop in there.
Konstantin, you're missing the lead here. You're burying the lead, sir. Which his personal behavior, I don't know. I don't know anything about that. I don't think any of us do. But I will say it is surprising to me that they so quickly fired the man who did one of the greatest things in recent corporate America history. He brought back McDonald's breakfast. He made it 24 hours a day. Is that not the greatest? Is that not the greatest gift any corporate CEO could give to the people, sir? I ask you, what is better?
I got to be honest with you. I was just talking to Trey today, and he was telling me that his little one hasn't had a Happy Meal yet, and I was just saying, it's pretty incredible that in this world
that's
that
un-American,
right now,
sir. I'm going to have to talk to that guy.
That's kind of my hint. But I was saying, in terms of the stock performance, who would have thunk that, in today's world where the new generation is basically boycotting fast food, that the stock could have done as well as it's done, right? It's a pretty incredible thing. But the breakfast coming back is definitely huge. That is the main lead here. You're absolutely correct. Anyway, from the stock's perspective, you obviously always want to see those previous resistances act as levels of support. We'll see what happens, but it looks like the stock is catching a little bit of a bid here. And it is a big component of the Dow. As you know, Dow is price weighted, so Procter & Gamble and McDonald's are not doing the Dow any favors today. Second name, Apple, obviously shows up on the list quite frequently. New all-time high in Apple is up 0.25% right now, lagging some of the other FANG names, but it had a hell of a run. It tagged the 20-day MA on the 31st of October and just ripped off that low, pretty much to the top side. So it's been from about 238 to 256, 20 points in 3 trading sessions, a pretty crazy range. Fidelity customers are leaning to the buy side in this one as well. 59% buys, 41% sells. When a stock is hitting a brand new all-time high, it is literally in uncharted territory. So from that perspective, I guess you could extrapolate some of the previous trend lines and maybe apply some Fibonacci extensions. But we haven't seen these levels before, so it's tough to tell where it potentially could stop and reverse. The next one that's on the list is BABA. That one shows up on the Fidelity orders by Fidelity customers list once in a while. Today is definitely closer to the top than it generally is. 44% buys versus 56% sells. Stock is actually up nicely, 1.7%. Today, I know that they caught an upgrade of a price target from Stifel today to 225 from 220. I know that they reported earnings last week on Friday and was definitely an inside move. I mean, premium sellers in that name probably made out like bandits. You had the stock closing on Thursday at 176.67, and the Friday's close was 176.46. So an inside move it was. It actually, in terms of the report itself, was a pretty solid report, beat on both earnings per share as well as the revenue numbers, so top and bottom line. But the stock is not going anywhere. The reason why I want to mention this is because this is a little bit of this relative technical wisdom, I guess. The stock is forming what looks like to me a rising wedge formation. And for those of you who are following along at home, you could take a look at a longer term chart. You go out to May of 2019, and you see that since then we've been only slightly making higher highs in Alibaba, just barely. And we're making higher lows along the way, but that initial first huge drawdown came a couple of days after that May 2019 earnings report. So it's a rising wedge because the support level is actually rising. But regardless of how you slice it, it generally is a bearish formation. So what I want to say is, in technical analysis, you only usually trade on confirmation of the fact. In order for this formation to actually play out, the support needs to be broken. And it generally leads to a trend reversal on longer time frames. So I would be very curious to see if the support gets tested and whether or not it will eventually be broken. Right now, there's kind of a collision of moving averages right underneath where the stock is currently trading. I'll be watching the 200-day MA on the downside there. But once again, I want to encourage everyone to understand that if you are trading a pattern, you need to be trading it based on specific interpretations and on confirmations of breaks in either direction. But the stock hasn't really been doing much and has been pretty volatile over the course of the past few years. Next one is spiders, and SPY doesn't really make the list, very frequently, but today definitely is on it. SPY is being traded 60% to the buy side, 40% to the sell side by Fidelity clients. Again, new all-time high in the S&P. If it is a new all-time high in SPY as well, but I think that the chart doesn't really do it justice because SPY does get adjusted down for the dividend every quarter. We'll have another one in the month of December. So unless you're looking at a total return chart, it doesn't really look the way the SPX chart looks exactly. So be mindful of that. If you're doing charting on the S&P, I do prefer doing charting using the SPX index. But nonetheless, right, the underlying is at a brand new all-time high. So we'll see where we go from here.
We'll see indeed. Let's see what the market's up to really quickly. You kind of gave us that overview there of what's trading at Fidelity. Let's see if the broad market agrees. Let's look here. Coming into this portion of the show here, we're seeing, VIX doing decent paper, about a little bit shy of 250,000 contracts. The ADV is about 401,000 out there, so managing just to stay a little bit above that 400,000 level. SPY at about nearly 2 million contracts. ADV about 2.83 million. Someone writing into me recently saying they see that SPY underlying volume is quite light these days. Options ADV is all right. It's not seeing a huge drawdown there. I'll have to dig in a little more to see if we see something lining up with that in the options side here. SPX coming in to about 800,000 contracts, ADV about 1.2 million. So SPY and SPX both doing decent paper today. The Q's at about 340,000 contracts, ADV about 680 or so. So actually right about half the ADV there. And we've got the Russell, aka IWM, closing in on 250,000 contracts, ADV about 340. So Russell also doing decent paper out here as well. Let's look at the top 10 in the broad market. Number 10, go figure, Mickey D's. $1.30 on the tape here. That gets you into the top 10 today, 130,000. Number 9, Bank of America, 167,000. Number 8, Tesla, $1.69. Number 7, Uber. They've got earnings coming up, 191,000. Number 6, good old AT&T, 196,000. Number 5, Facebook, 232. Number 4, AMD, 236 on the tape. Number 3, GE back in the top 10 and back in the top 3 actually with 273,000. Numero dos there, Baba. The aforementioned Baba, 317,000 contracts. And once again, number 1 with the bullet, good old Apple, 424,000. Not a heck of a lot going on out there from an overall Apple stock perspective. And yet, up about 1/3%. yet it's not keeping it off the top of the tape and from dominating the tape. Speaking of dominating the tape really quickly, since the numbers are out, let's get to them. It wasn't dominating the tape this past month of October. That was overall OCC volume. October, despite its moniker of being Rocktober, wasn't exactly rocking from an overall volume perspective. OCC announcing today that their overall volume hit 451.3 million contracts. That's a 20.5% drop from October of last year. ADV is 19.7 million. That's down nearly 5%. Compared to 20. Remember, last year was kind of a crazy year, but still, we're well off those levels there. Let's drill down into the options. Remember, OCC clears a lot of stuff, mostly options, but not all options. Let's see. Overall listed options volume, 444.7 million contracts. That's down 19.9% from OCC of last year. Equity options, drilling down even further, hit about 403 million contracts. That's an 18.1% decrease. That includes cleared ETF options volume of 165 million contracts. That's down 28.5% from October. Man, that's almost 1/3. That's a big drop. Index options volume was down 1/3 actually, a little more than 1/3, 34%, 41.8 million contracts out there. So cleared ETF and index options both down nearly 1/3, which is a lot. And then the futures, that's bad. Look at the futures. The futures were about 6.5 million contracts. That's down nearly 50% from this time last year. So obviously October last year, a bit of an outlier, but still, that's when, of course, the worm started to turn to the downside. I believe it was October 11th of last year. So that was a tumultuous period. It was February, then kind of October were the two big periods of last year from a vol and from a sell-off and everything else perspective. But still, these are pretty stark numbers. And let's see what else is stark as we keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Let's get right into it, listeners. It is time for the Odd Block. It is time to get weird, wild, wonderful, whimsical. Let's see here what's going on. We're going to dive right into it with a name we just talked about on our last show. Mr. Rock Lobster, I was chatting with your compatriot there, the Meatball, and we were parsing some activity on the last show in ArcelorMittal. This is, of course, a multinational steel manufacturer, ticker symbol MT. And at the time of the show, we were parsing just last week, this on Halloween, that someone was coming in. Looks like they were gobbling up nearly 7,000 of the NOV expiring this week on the 8th, 15.5 calls. Seemed pretty aggressive, seemed pretty outlandish, and it seemed like an interesting one to watch. In fact, it was so inspirational, Mr. Rock Lobster, that Meatball told me after the show he went out and did a one lot just to follow along and have something to keep an eye on for this trade. So he was intrigued as well. He put it in his to be watched as well. And it turns out it was a good trade across the board there, because U.S. Steel had earnings not that long after this trade went up. At the time this trade went up, the stock for MT was at about 14.5 or so. And coming into showtime right now, U.S. Steel had good numbers, and that, go figure, someone's winning the trade war, right? It was designed to effectively help U.S. Steel. It was announced with the CEO of U.S. Steel, so it was designed to help them. It seems to be working, at least on that front. U.S. Steel's earnings numbers were good, and therefore that lifted the whole sector, including MT. MT right now at 16.25. So these 15.5 calls were well-timed, and they're looking quite good. They're now trading today. They're trading around $1 right now. So this guy is up pretty much 80 cents on these calls. So he's up right around $500,000 on these calls right now. The weird thing, Mr. Rock Lobster, is that he hasn't taken his money and gotten the heck out of Dodge. These things are still open coming into today, and they're not really lighting it up today. So weird on a couple of fronts. First off, what do you think about your cohort there piggybacking this for a whole one lot? And then B, seems like some interesting timing on these calls, Mr. Rock Lobster, yet he hasn't taken his money and run. He's sitting around. Maybe he expects more upside here. What do you think of that?
I think, unusual activity is kind of, it's fun to watch, right? So you can get a lot of ideas, especially when you see what could be going on with it. The fact that they're not taking their money yet, maybe they're seeing a little bit more to go. Although at this point, I wouldn't say they're safely in the money, but they do have 70, 80 cents of intrinsic value. So not a bad trade. And what would Bob Barker say? The price was right, 21 cents. That's the way to spec on some options that were close to the money. So, don't you remember the guy that owns ArcelorMittal? He's a pretty wealthy dude. He was one of the world's richest men 8 or 9 years ago when steel prices were sky high. So maybe he's on a roll to be the richest guy in the world again. I think he owns 30 or 40% of this company, but a pretty big chunk. But it would not surprise me if the Greasy Meatball decided to jump on board and ride a couple of calls every now and then. I have seen him do that at least once before.
He just comes on these shows for inspiration, really. That's why he comes on. He wants to see where he could sling a little bit of capital out there. And you're right. Whoever's slinging this capital is up about $500,000. He can obviously wait. He does have some intrinsic value around 70 odd cents. So these things, if the stock stays here at the end of the week, he's going to lose 30 cents of that buck, but he's going to keep a decent chunk of it. So maybe he's just he's waiting. I don't know. It's interesting timing across the board here. The timing when they get in, the timing when they get out is always fascinating to me. And the latter portion is waiting. So I guess we'll have to check in on this one more time here on Thursday to see if our friend got out here, if he's watching these bad boys slowly erode down to 70 odd cents. We shall see. Meanwhile, let's keep on rolling. This is a new one today, but this is actually a name we talked about recently as well. This is our old friend Mallinckrodt PLC, an Irish tax registered manufacturer of specialty pharmaceuticals. I love that. I love that little geographically based description. ticker symbol MNK Monk. Trading today a whopping $3.83, up 45 cents, or nearly over 13% today. So a good little run for them. This is a name, as you recall, we talked about it not too long ago, on the 17th, actually, and we'll get to that in a second. This is the name that's had an interesting year. A year ago, it was trading $27, almost immediately got up to about 30, 31, so roughly 10x, a little less than that where it is right now. And then pretty much sold off hard by the end of the year, December 31st, it was down to $15.80, so pretty much gave up about half of that in the span of about a month. Then it kind of vacillated around that low 20s level for a while, and it looks like they had some earnings again in April that weren't too good. Shot them down to about 16 by May, and then again by late May, they were trading under $10. So been a rough start to the year. Then ever since then, they kind of slowly drifted down from 9 down to their nadir. Actually, they got down to a $1.43. This name. So wow, what a tumultuous year this has been, from $30 down to $1 and change, and now back up to a whopping $3.83. So this one has been literally all over the place over the course of the past year. If you recall, not too long ago, on the 17th, we highlighted some longer-term put love out here. It was 13,000 of the Jan 4 puts going up for $2.14, pretty much right off the offer, 13,000 plus times. This was opening. And we were kind of scratching our head at the time saying, why would you go so meaty with a stock that was, puts that were almost the value of the stock at that point? It was kind of a weird trade. And now to follow that up, we got more meaty long-term puts, this time going out in April. Same strike, different month. April 4 puts this time, going up again. Almost the exact same amount. They had 13,173 last time. Now we have 13,290 of the April 4s. Also going up for $1.90. Just gobbling that offer. No negotiation, no penny here, no nothing. Just taking. They were $1.30 at $1.90, so nice and wide there. And he said, I'm not playing, not doing $1.80, nothing. Right at $1.90. This was on the box, on the floor of the box, actually. Wow, this is the first time I've seen a box floor print. Interesting. This is opening as well. Should note that the other parts were opening as well. Should talk to the box folks. That's actually a big print for box. Interesting. Let's see. Earnings are actually tomorrow before the bells. Mr. Rock Lobster, this is kind of a piling on, it seems like, of what we saw last time. Our friend loaded up on Jan 4 puts. It can't be a coinky-dink that is almost the exact same amount. In fact, so much so I had to go look to make sure it wasn't a roll. It was not a roll. Those puts are still open in Jan. So he put on about 13,200 meaty puts in Jan. He's putting on almost the exact same number in April. All sorts of weird on this one. Put it up on the box, the box trading floor, actually. So that's funky in and of itself. A lot of funk here, Mr. Rock Lobster. Let's see. Coming into today's, the puts in Jan. Those are 4 puts. Where are they? There are still about 20,000 of those on that strike still open as of this morning. So Jan puts open for size. I don't know. What do you think about all this, Mr. Meatball? Or Mr. Rock Lobster, I should say. I apologize. We talked about this a little while ago, but more same size, even almost as meaty puts, but a little bit longer term here. Once again, in Mallinckrodt PLC.
So, this is a confusing one because I'm seeing like Walgreens, Teva, all the stocks that have been kind of gotten smacked around by this opioid crisis are all kind of rallying today. I thought Mallinckrodt might be one of those. And I'm seeing all these puts, right? And like, are they doing the head fake with the puts? Are they selling them? I'm like, and that's the thing I couldn't figure out because all the pricing says buy, but like, why the hell are they buying them? So this is, unless they think the stock is going to zero, but even then, like, are they buying these puts against stock? I have to say, I don't know everything about options, but I probably know more than the average person. This one is just, the open interest, too, on all these puts is just enormous. Like 10, 20, 30,000 contracts, every other strike. So either they've been walking it all the way down in some sort of death fugue, because the stock has gone down so far. They keep buying puts. They keep rolling their puts down. Is all I can think of. And they don't have really a reason to exercise or close them yet. But there's a ton of open interest in January. So I mean, you look at it and you're like, well, maybe they're just trying to walk all these things down and maybe trying to limit the loss on an equity position. But I mean, from 30 to $1, it's like it's almost like you can't buy enough puts to help fix that, because that's just bad all the way around. So anyway, that's where I see this. I find this just like this is a hard one for me to sit and figure out, because the only thing I think is they're just trying to protect or ride the stock into the floor, and it's been working, but they're running out of down. I mean, what do you go with the 4 puts for $2? So
yeah, not much left.
Maybe they just run the strategy. It's worked, and they're going to keep doing it till it's zero, I guess. That's the only thing I can think of on this.
Yeah, this is the funky one. No matter how you're kind of looking at it here. That's why you put it in our odd block. We want to see how some of this plays out. Maybe we'll know a little more after the earnings tomorrow. Let's go here. Yeah, last up on our odd block, our Eye of Sauron has delivered to us Knight Swift Transportation Holdings, ticker symbol KNOX, KNX. Trading today, 38.66, up about $1.11, nearly 3%. This is the name. Let's see. A year ago, it was trading about $34, so a little bit shy of where it is right now. Then it sold off in the great nadir of the market right around Christmas Eve to about $24, 23 and change actually. And then it kind of bounced right back by end of January, it's trading 33 again, got up to about 35 by February, 36 in April, then it kind of sold off again down to 28 in June, then bounced right back up again to about 38. So about 10-handle rally by middle of July. So things had a nice little vacillation to it. Then it sold off again to about 31, bound in August, back up to 36 in September. You kind of see where I'm going here. Sold off again, back up. Now we're on a back upswing of this, back up to 38 and change. So this one's kind of been all over, but a pretty tight range for the most part, the better part of this year, once it got outside of the Christmas Eve sell-off here. So what did we see today? Let's see. We got 10,000 even, of the June 55, the June double calls going up for 70 cents. This looks like it's near, there was 65 cents at 80, so near the bid. Worth noting, interesting trade tag on this one too, Mr. Rock Lobster. So much so that I actually reached out to the Flowmaster on this to see if this is the new trade tag coming in, because I love this. This is way more detailed than we're used to getting. This went up as tied/floor. So it went up on the Amex floor, which that's great in and of itself. Opening, which we usually get, and complex. They added that on as well. So we got 4 tags for the price of 1 now. And it's worth noting, you dig in a little bit, we see 140,000 shares of this went up against this for 38.42. So that puts us at about a 14 delta, if my quick math is correct. So 38.42, that's a little bit shy where the stock is right now against an upside. So we got a basic call overwrite, 10,000 of them, Mr. Rock Lobster, tying up some capital from now until June. What do you think about this one here? The June doubles for, what do we get? For 70 cents against the stock, sir. Again, an interest, it only took them what? How long have we been looking at trade tags on this show? 8 years. And I'd say trading since 1990s, 29 years. Took them all that time to make trade tags actually useful.
And they finally decide to put up like Tide or something.
Yeah, it's amazing, isn't it? It almost seems wrong. It seems like they're telling me too much now.
It's like, we do have electronic communication now, so it's just amazing that they actually jumped over the broom on this one and got to, and are putting down tags that actually are meaningful on the trade.
It's like an embarrassment of riches.
I mean, unbelievable. To me, this just looks like a buy right. Somebody just wants, running around money on this. I mean, if they're tying it, this would be an aggressive. It just looks like a long, long stock short call. Somebody wants to make their 88 cents, and they're happy with that. So. Nothing, not a terrible trade, but just it's a yield trade at all-time highs. So, it probably will make some kind of money, but you never know, because ultimately it's whatever the stock does. But they're looking for their 70 cents on their call, so it's only 6 months away till they get it.
Yeah, I guess we shall find out. Let's keep on rolling, though. Let's find out what Uncle Mike has in store for us with a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is indeed the portion of the program where Uncle Mike dispenses options, wit, and or wisdom on some options, strategy, or educational topic. Uncle Mike, sir, I know you're giddy with your all-time highs, so if you can pull yourself away from that a little bit, what do you want to regale our listeners with today, sir?
I mean, I can't even talk straight. It's that exciting of a day. I mean, I want to go through a situation that, let's say that the market rises and volatility also rises at the same time, or just in general, kind of an adjustment. So I'm actually in this trade, and this is what I'm looking at right now, and I'll probably do it by day's end. I can't. It's on SPY. I can't give you the strikes in the months. Just compliance kind of frowns upon that type of thing. I've been informed. But anyway, let's say that you are in a position to where I've described this a bunch of times on the show, to where if you're ahead on the year, but you still think you got some more bullishness in you, and you want to still participate in the market. Well, about a year ago at that time, that was my situation, and I'm thinking, okay, I don't want to take a good year and turn it into a bad year, but I'm still pretty bullish. So I just bought an out-of-the-money call. And as most of you know, who followed the markets last year, I got the crap kicked out of me when doing that. But I saved a good year, meaning that I kept a lot of my money on the sidelines because of the fact that I kept my profits. And I still did have bullish exposure to the upside should the market continue to go up, which it obviously did not. But that was it wasn't a profitable play. In fact, it was a losing play, but that, I think, shows the importance of money management in a trading system, to where when the market goes down 6%, we end up with a pretty good year. So I'm kind of at a similar point in time right now, to where it's a very similar sentiment as to what I'm having now. However, I don't feel that buying an out-of-the-money call is really the right thing to do. So I'm currently in an out-of-the-money call calendar. Once again, the strikes and the months I can't really divulge, but with that, the market is getting closer to my call calendar. And the last thing that I ever want to be is something called, I forget what you call it, market neutral? I mean, that just, it just sends chills up my spine being such a thing ever. I mean, I'd rather just be flat. In terms of my style of trading, of course, I've done market neutral trading in my day, but for the most part, I've just kind of evolved to just being a perma-bull, or just a don't play at all kind of guy. But with that, the market's getting closer to my out-of-the-money call spread, out-of-the-money call calendar. And right now, it's in a 1-for-1 call calendar. So what I'm looking to do at this point is, as it's getting closer, my concern is that this market is just going to go up to 4,000, let's say. And I'm just making up numbers, of course. But if we were to go up to the 4,000 mark in the SPX, I don't think it's going to go that high anytime soon, but let's just say it did. Of course, it would go well past my out-of-the-money call calendar, and I'd actually go not only neutral, but I can't even say the other word to what the position would become. Bearish. Oh my gosh, I couldn't even think of such a thing. And I don't want that. So what I'm doing with this is, it's in a 1-for-1 ratio, but let's say that I have two contracts, so 2-for-2 ratio. I always trade in even numbers in case I ever need to do something like this. What I'm looking to do is buy back the short call for a loss, buy back both of them for a loss, and then go lower to a lower strike price, but just with selling one call instead of two. So I'll be in a 1-by-2 back spread. Now, let's say the market goes up, down, or sideways. If the market stays the same or goes down, I'll be in a very similar position when the first month expires, or the near-term month expires, because I'm going to get twice as much premium as what I got with the two contracts. So in other words, I'm selling two and buying one, but the one that I'm buying, I'll have double the premium, so it'll be a wash. Now, of course, I'll do some other type of adjustment out before expiration, I'm sure, but just so we understand it. Should the market stay the same thing. So I'm still not quite going at the money. Should the market go higher? It's going to be more of a loss with the short options, but it's limited because of the fact that there's only one of them instead of two of them. So with that, let's say that we do go up to 4,000. I will have half of my position will be a bear call spread that I will get my face ripped in on, of course. But the other half of it will just be a long call to where I will rip the market's face in a much greater way. So where I'm going with this is that I'm trying to set up a position to where I have the ability to gain from unlimited upside. But yet, if we don't move, I'm still not compromising the original integrity of the trade. And because of the fact that we have had a little bit more gamma happen in the more near the money calls, not at the money, but just a little bit more near the money, I'm able to make a 2-for-1 roll and not lose any of the premium on it. So that's one thing that I'm looking to do. I think that when you have a position to where it's at risk of turning into something you didn't want to turn into in the first place, number one, you shouldn't have done the trade. But number two, if it is at risk of doing such a thing, you need to have an adjustment like this in your back pocket, which I did. So the 1-for-2 ratio roll down when a bullish calendar is becoming a little bit too neutral for you is what I'm doing. Thank you very much.
1-for-2 ratio. I like it. Getting a little funky with your ratio, sir. I like it. And now it's time for us to get funky with our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, let's get to it. Got some earnings actually popping off after the bell still this week. Let's start with today. We got Uber and Shake Shack after the bell. Under Armour, not exactly looking good before the bell there as well. We got Marriott after the bell today. Later on this week, we've got Chesapeake tomorrow, CVS and Roku and Qualcomm on Wednesday. Fitbit as well, though. I guess they're now going to be part of the Alphabet empire, so we'll see how that plays out. Teva, AMC, Disney on Thursday, Activision, Blizzard as well. Friday, our old friend Duke Energy. If you like trading all these earnings, you want to break down the earnings, the volatility, what they've done in the past, what they're predicted to do right now, the place to do that, of course, theoptionsinsider.com. Click on those earnings move results and earnings move reports, I should say, and the earnings move results. Those are found on that options, news, and articles tab on our website there. If you do that, you'll find a couple of them. Let's see what we got today. Popping off after the bell, we've got Marriott later today. At the time of this report, they were closed about 126.5. They were pricing in about 290, which is pretty much in line with what they've delivered in the past, and they've delivered about 310 in terms of earnings straddle. So not quite a huge amount there. Let's see. Shake Shack, they were at $83 coming into this report. They were pricing in $5.63. That's actually demonstrably light for them. They in the past have delivered $7.32 worth of movement out there. So that's pretty light, almost $2. So that's pretty interesting. We've also got Uber. Uber is coming off after the bell today as well. They're at about 32.5 at the time of this report. They were pricing in about $1.80 on that at the money straddle, which is fairly rich for them. Of course, they don't have that long of a track record yet, but in the past they've delivered about $1.35. So that straddle kind of bucking the trend, actually a little bit pricey, a little bit juicy out there if you want to see all that. By the way, our friends Under Armour, let's look at them really quickly. It popped off before the bell. This is the results report here. And we could see here, they at the time of the report, they closed at about $18.91 going into the report, and they were pricing in 1.5%. And they actually delivered 15% to the downside. So dramatically outperforming their straddle by about almost 1,000%. So big move. Coming into showtime, their stock was at about 16 and change out there, 16.05. So of course, I think the SEC revealing an investigation into them. So never good news on that front. But if you like that kind of data, we got a ton of it. Pretty much any ticker you could imagine, theoptionsinsider.com is the place to go to begin your journey. Now let's go continue our journey out there to the Fidelity land. Mr. Last Emperor, sir, what is on your radar here going into the rest of the week?
Definitely going to be watching the Roku earnings because they do tend to move quite a bit. It seems like earnings is not the only thing that that can move this stock. It moves on news from all sorts of competitors. So I feel like Fidelity customers trading Roku is definitely puts it on my list of things to watch. It's been a huge mover, from the previous earnings announcement from about $100 to $170 back to $100. Now it's trading $141. So I'm going to be keeping an eye on this one. I'm going to be watching Disney, obviously, for the size of the company and them being actually in competition with a lot of content providers going forward with their launch of Disney Plus. So that would be interesting. From the economic side of things, watching the international trade that has been, kind of in this deficit, for quite some time. ISM numbers on Friday confirmed the fact that manufacturing is in I guess contraction mode since last August of 2018. So we'll continue to look at some of these numbers. They're being masked right now by obviously the optimism of a trade deal getting done. So we'll see. I try to follow price and make sure that I'm listening to what the market is telling me, but at the same time paying attention to some of these reports. On Friday, on Thursday, we're going to get the jobless claims. That's going to be another one of those dot plots for the Fed going forward as well. So those are the things I'm watching.
Mr. Rocklopster, same question for you, sir. What are you watching the rest of this week until we can gather here together on Thursday, sir?
Can we make new lows and VIX? Make Mike TOSAW happy? Really, that's what we want to wait for until Thursday. And how many times in the month of November can he say that there's never been a better time to sell your S&P 500 stock? So I'd like to see like how some of the drug companies, there's some like Walmart, Walgreens, like those are stocks that I own and follow. Especially Walmart, how they're trying to catch up with Amazon. So if there's a race in retail, stuff like that, where, wow, it's almost like the macro, like the geopolitical stuff is off the radar, at least for a day or two, let's call it. And when it is, the market just decides it wants to go up. So I for one, do not want to get in the way of this bull, I would have to say.
What's the old saying? The market can remain irrational longer than you can remain solvent. So, yeah. Get in front of this bull at your peril. And speaking of bulls, Uncle Mike, sir, what is on your radar for the rest of the week?
Watching the bulls, by all means. No. I just see any news on the trade deal in addition to what everyone else had said. Also wanting to see if we get any movement out of the metals. I'm curious to see if all of a sudden we have great news and the market and stocks rally, our metal is going to come down because of less fear. Along with the fact that we're just watching the energy stocks had a little bit of a movement, had some movement today. So keep an eye on those. There might be more to come.
Unfortunately, that music means there is no more show to come, listeners. We are done. But before we go, let's go back around the horn really quickly. Let's start just the way we came. Uncle Mike, sir, if folks are intrigued, want to learn more about what you got going on, where should they go? What should they do?
I love how you always do the segue on me. I'm so honored. If you want more information on what I do, go to my website, stcharleswealth.com, if you are looking for an advisor to do this stuff for you.
There you go. Let Uncle Mike do it for you. If you're tired of all this, market's up, VIX is up, what the heck's going on? Call a guy like Uncle Mike. He can hold your hands through all this. And you want someone to maybe explain to you why all this is happening, like he did on the show today. Maybe you want to hit up the Rock Lobster. Mr. Rock Lobster, what do you guys have cooking in the land of the pit, sir? Uh-oh, Mr. Rock Lobster, I believe he has muted himself, as always. Mr. Rock Lobster, one more chime, sir.
I just was making sure you're paying attention. I look for a new webinar from me in about the next 2 weeks. It'll be an advanced topic, probably on how to trade low vol in a rising S&P 500 market. So take a look at that, and also check out our vol newsletter and all the goodies we have. The new silver course, Mark is doing a great job writing our newsletter, so come by and check it out.
There you go. OptionPit.com is the place to go. You want to get the Rock Lobster's newsletter. Maybe you want to get them to text you throughout the day with alerts and things. That's the place to go. OptionPit.com. And last but not least, Mr. Last Emperor. If they want to kick the tires and light the fires over there on the Fidelity Options platform, where should they go? What should they do, sir?
Fidelity.com/options to apply for options trading. Fidelity.com/coaching for all the things that we do in the small classroom sessions. including screen share of our award-winning platform here at Fidelity. So always open to individual one-on-one conversations with you as well. If you would like to chat and you are a Fidelity customer already, give me a call.
There you go. Fidelity.com/options is the place to begin your voyage. Once you do that, once you kick the tires and light the fires, you can call up the Last Emperor, the Last Dad of Krypton, or the Song of Ice and Fire. Ask for these guys directly if you got questions. Cool thing to do. Fidelity.com/options. To learn more, on behalf of the Last Emperor, the Rock Lobster, Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in questions. Don't worry, we get to those on Thursday. If you're looking forward to a little bit of the old crypto rundown, got to change the schedule for you. Like I said, we got so many international guests on that show. It's like herding cats sometimes. So we're going to do a crypto rundown tomorrow. That lines up better with our international guest schedule. We're going to bring the folks from Skew back on. Remember, they're like the keepers of some of the best data and analytics and vol stuff over there in the land of crypto and crypto derivatives. So we'll be getting into all that tomorrow on the Crypto Rundown. Wednesday, of course, got our old friend OPR is going to be always there, as always. Thursday, double duty, back here for the option block. And, of course, for TWIFO and Friday for vol views. You never know what else is going to be hitting the network throughout the week, too. So stay tuned to the live. Stay tuned to the podcast. And we'll see you back here tomorrow for the Crypto Rundown.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.